Hi everybody, thanks for joining me today for this masterclass. It's the first day of spring here in Australia, and I'm so excited to bring you this masterclass because it is a bit of a passion of mine to make sure that people are not only ready to apply for grants, but they've also got that financial capability behind them, and know exactly that their setup is right, and that when a grant comes out that they can be eligible for and that they're not going to miss out. This masterclass came about because I was having way too many conversations with people that they would find a grant, think they were eligible for it, and due to some technicality or the way that their business was set up for some reason, whether it be not registered for GST, not the right entity structure, they then unfortunately couldn't apply. So that led me to creating this masterclass. So thank you for joining me today, and I will get right onto it. So I'm Liz Fleming of the Grants Club. I'm a grants writer, a coach and strategist who loves working with organisations to help them take a strategic approach to their funding and their growth strategies. I'm also a chartered accountant, hence the numbers, but there's always a budget in every grant application that people always seem to struggle with. So I think it's a good synergy. I've worked in corporate, oil and gas, energy, and a few government stints as well. So I've been on both sides of the grants coin, and it blew my mind of how many grants were actually available, and then realizing that people didn't actually know how to apply for them. So that's how I started the Grants Club and writing grants for businesses, not-for-profits, community groups, and other organisations across Australia. So today we are going to be covering off, I'm going to start with just sharing some information about the grants ecosystem in Australia, because I think that's really important to really cement the reasons why we need to become grants ready, so that we don't miss out on these opportunities that are out there from the governments. I'm then going to talk a little bit about the entity structures that are available. And throughout today's masterclass, I just want you to think about and create an awareness of whether, however you're set up, whatever you're doing in business, is the right way forward for you. So I don't want you to get all down if you find that you're not doing something quite right, or there might be some change needed. That's okay, because if you don't know what you don't know, and now's the catalyst to make those changes for the future, so that you don't miss out on any grants that might come your way or that you may be eligible for. Understanding your business numbers, we'll touch on that as well. And I'm also going to be talking about how important financial capability is within your organisation or business to make sure that you are maximising all the opportunities that are out there. I'm going to touch a little bit on GST registration, and this is for both for-profit businesses and not-for-profit businesses. There's slightly different rules for both, but again, it is an absolute bugbear of mine where people cannot apply for grants if they're not registered for GST. And so it's about gaining an understanding of why you should be registered for GST, and that it's not just about the thresholds that are out there from the ATO. Then we're going to finish off with my 5 ways of being strategic about grants. I think in business, you've got to be strategic about everything you do. And then we'll have some time for some Q&A at the end. I have scheduled 90 minutes, but depending on the number of questions, we may be finished in an hour. So if you do have any questions throughout the masterclass, please pop them into the chat, put a letter Q there. I'm happy to answer questions as we go. I am on my own today. I normally have an assistant with me, so just be patient with me if I don't see it straight away, but be sure that I do love answering your questions when it comes to grants, and there's no silly question either. One thing I can't necessarily do is work through your specific circumstances for your business, your entity, your organisation. So I know that we've got some for-profit businesses, we've got some community groups, some sporting clubs, and many others that are going to be watching the recording. So hello to you all. Thank you for being part of this, and I hope that you've got your notepad and pen ready to take some notes to start learning today. So as I said, I'm just going to start with some facts that are really, really important to understand the grants ecosystem across Australia. So most of the work I do is grants from the local council areas, state government and federal government. So making sure you know what councils areas you operate within. So this will mean the ones that where you're based, where your business is registered, as well as those businesses where you might have multiple stores, multiple different areas that you cover and service. So again, creating a relationship with the local council, subscribing to their newsletters for business and community, because they're some of the ways that we can find out about grants. State government, so depending on what state you live in across Australia, there's always a business or service government department that are responsible for grants and funding. So again, become familiar with those departments and agencies that are applicable for you and your organisation. And of course, federal government, they have grants and programs that are available across the whole of Australia. But with anything, there's always guidelines, there's always exclusions. So making sure we can read that information to ensure that we are applying for the right things that are out there for us. At the end of the day, as I always say, we want money in your bank account to be able to fast track your projects, fast track your programs, and have a greater impact on the community and the world that you operate within. The second thing I always share with people is that grants are, like any business, a long-term investment. We need to spend money to make money. We need to create those opportunities. We need to be searching for grants. We need to be thinking about what our wish list is, what are our projects that we would do. So we can't, it's not a set and forget. Just because we look for grants today and there aren't any doesn't mean that we won't look next week or tomorrow, and there might be some grants as well. So you need to keep that in mind. And also the other reason I put this in here is the amount of people that think because we're getting the money from the government, they think they can't pay me. They think they don't have to pay me. So they go, oh, well, we're getting a grant. So, oh, you just have to work for free. So again, it's about that strategic approach, investing in your business and your organization for future growth and creating those opportunities. Did you know that right now, I think it's actually up to like 2,500 grants available across Australia. Now, that doesn't mean to say that every single one of them you're eligible for. Might not be any that you're eligible for, but that is the pool of grant programs that are available across Australia, across those three levels of government. So you can see there is much room for great opportunity here. We just need to be ready and looking in the right place as well. Some people think that grants have to be paid back like a business loan. They don't. So they are essentially a gift, free money. They don't have to be paid back to the government. And of course, you do have to do what you said you were going to do in your proposal. Then if you don't do that, yes, you will have to pay the money back. But if you, got a grant for $25,000 to upgrade your to energy efficient appliances, if you do that, then there's nothing to pay back. And yes, there is a bit of a reporting requirement and things like that, but the money does not have to be paid back like a business loan. There's no interest charged on grants. And you need to make sure that you are proactive. When it comes to grants, especially from the government, they might put one media release out. They might send out one email to, the people that do subscribe. But they don't generally tap people on the shoulder. So again, we need to be proactive in everything we do with grants and be looking for them ourselves. And again, being ready. So now we're going to move on to understanding your business structure. Now, this is going to be different for everybody because, as we see here, there's lots of different entity structures that are available to us in Australia, depending on what we're doing, depending on what we're trying to achieve, and depending who we are and who's involved in our organisation or business, or what type of purpose our organisation has as well. So I'm just going to quickly run through these, but this is where some people get unstuck. So as a sole trader, that's normally when you're starting out, might just be you working in the business. You can employ people as a sole trader, but remember that all your profit or surplus that you earn as a sole trader is deemed as your personal income, and you'll be taxed at the income rate that is appropriate to that level of income. A partnership is basically two or more people coming together to run a business as a partnership. And again, it's like having two sole traders. At the end of the year, when the profits are distributed, They're distributed by the number of shares or the proportion. So if it's 50-50, I'll take 50% of the income, my partner will take 50% of the income, and again, that's deemed as my income for the year and taxed appropriately. So that's a partnership. Both sole trader and partnership don't have limited liability. What does that mean? It means that if your business gets into debt, you can be personally liable. So if you own your own home or it's mortgaged, then that asset can be taken to repay those debts that have been drawn up from your sole trader or partnership. So there's no separation between yourself and your sole trader and a partnership, and they're not actually separate legal entities. Then we get onto a company, which we are creating a separate legal entity. And this is where we have directors and shareholders, depending on who's involved. And that allows us to operate at arm's length from ourselves. And it also means that we have limited liability, meaning that our personal assets ordinarily cannot be used to repay any company debt. So it is a real advantage to be protected in business through a company. I'm going to touch on a company a little bit later as well. Not-for-profit, so if you're in the charitable space or impact space, you may have created a not-for-profit, which is normally a company as a not-for-profit. So there's a little bit of crossover here, but recognizing that if you want to operate as a not-for-profit and a charity, you need to make sure you get the right entity structure there. Incorporated association is normally like a sporting club or any other club or group that has a volunteer committee or board, and they may have members as well. Trusts, people set up trusts to protect themselves from the assets that I've just, talked about. But quite often when we talk about grant eligibility, trust cannot apply. So again, there's a few tricks through all of these. And a cooperative as well. So this might be where a group of members come together for a common benefit. But again, I've seen time and time again that these types of entities are excluded from grant applications. Same with sole traders. And the reason why I go on about this is because the government, doesn't matter who it is, that are giving away the money through the grant programs are risk averse. So they don't want to be seen to be making risky transactions and making risky decisions. As far as they're concerned, a sole trader or a partnership are most of the time too risky to give grants to. So that's the first thing. You will see a lot of grants for businesses exclude sole traders and partnerships from even applying. And you might say that's not fair, and it's probably not, but you have to take it from a equitable point of view in terms of the government seeing that as too risky. At the end of the day, they want to be able to give the money to the grant recipients and know that they're going to spend it on what they proposed, and then that business is going to continue into the future. A company obviously takes it takes a little bit of setup. There's some asset fees and things like that to consider as well. But again, they're protected more because it is a separate legal entity. So if you are running a business that is turning over, considerable amount, you do need to be looking at whether you move into a company structure. And today's masterclass is also equipping you with the ideas and the types of conversations and the types of questions that you can then go to your accountant or finance professional to be able to talk through this to make sure that you are set up properly to become grants ready. So as I've said, there's legal and regulatory requirements for every entity structure. Taxation is always has an impact as well. But as a chartered accountant, all I can say is don't do anything just for the purposes of tax. There has to be some other reasons why you are setting something up, and making sure that you know those reasons from your accountant as well. Liability, we've touched on that, personal liability versus company and entity liability. Funding and investment, again, we're talking about grants here today, but when we're looking at bank loans and things like that, again, the riskiness of sole traders and companies looking more favourably to raising capital. Same with attracting investors. If somebody says, I want to invest in your business, they will not invest in a sole trader because there's no way to give shares of a sole trader entity. They will then probably require you to create a company where you have some shares, they have some shares, and that's how that is denoted of their investment in your business. Control and management, again, it's important to know your rights around who's got what percentage in a company. Ordinarily, if you have more than 51% of the shares, you're in control. Therefore, if you have less than 51% of the shares, you have have less control in the business and the operation. So again, these are just really high-level rules, but they are things to consider and be aware of. One, at the setup phase of your businesses, but also as you grow as well, because there becomes times when you've outgrown your current entity structure, especially from a sole trader to a company. And as a bit of a threshold, it's not set in stone, but if you as a sole trader are earning around $120,000 as your profit, so that's the amount that you are deeming as your individual income for the year on your tax return, then that's when you should be considering moving to a company so that you can maximize the tax benefits and just be aware of everything that's going on in your business in terms of those requirements. As I said, there are some setup costs and some ongoing administration costs, some ethic fees for for companies, and also the requirement of your financials to be done by a professional as well. So again, just a few things to be aware of. Has anybody got any questions around that? Does that all make sense, or is that just gone over everybody's head? If someone can just unmute themselves and say, yep.
All good from me.
Awesome, yep. Josh. Kathleen, thank you. I think sometimes I always say a lot of businesses, or it doesn't matter, business, organization, nobody does it because they're good at finance. And so a lot of people are scared of finance. They're scared of all this legal speak. But I've seen time and time again where they've put their trust in their accountant, and their accountant has not necessarily done the right thing for them based on their growth strategy, but also they haven't had a really solid growth strategy as well. So it becomes a bit of a merry-go-round, and we've just got to make sure that we're aware of what we should be doing to maximize the benefits and the opportunities that can come our way. So here's just a bit of information about a company. Again, if you are operating as a sole trader and you're thinking about a company, these are some of the things to be thinking about. So understanding your business numbers. Now, this is really all about, as I said at the start, there's always a budget in a grant application, because at the end of the day, we're getting money for something, and so we need to be able to display and determine how we're going to spend that money. So yes, we need to get quotes and things like that, but we need to know the difference between GST inclusive, GST exclusive amounts, all of that sort of stuff, but also making sure that we understand our own numbers in our own organization as well. So if you've got Xero or MYOB or whatever finance system it is, even if you've got a spreadsheet, there is nothing wrong with that, but you need to have something that is collating your finance numbers and not just relying on the bank statement, because that's not really a finance system. And then we need to make sure that we understand and can interpret our own key financial statements. And there's normally three. It's the balance sheet, which is the statement of financial position, that as at right now, this is how many assets, how many liabilities, and how much equity I have in my business or organization. Then the income statement, or profit and loss, is the sales minus your expenses that it costs to deliver those sales, and then the profit that we've made at the end of the month or the year. And cash flow statement, this is how much cash is coming into your business, when and how we can predict, or cash flow statement is when we're looking backwards of how that has gone out, and then sometimes we're looking forward for a cash flow statement to be able to estimate our working capital and how much cash we might need for our business going forward to do what we need to do. So those of you who are on live, just pop up your hand if you do understand, or at least look at those reports on a regular basis in your organization. Yeah, there's a few of you. So that's really good to see. For those of you who aren't looking at that, then just need to, whether you're in an organisation, on a committee or whatever, there'll be someone around, or talk to your accountant and get them to go through it in depth. And again, analysing on a regular basis. So, so analysing what's your sales ratio to cost of goods sales, what is your profit as a percentage of sales for that month or that period. So again, depending on your business, depending on what's important, but being regularly looking at your business's financial health. Now, you might be saying, what has this got to do with grants? This has everything to do with grants. A couple of things here that are really, really important that people don't always think about is that some grants are maybe a 50% match. So that means that if you've got a project for $100,000, they're only going to allow you to apply for $50,000. So we have to finish this project, we need to find $50,000 as our contribution for that grant. I've had clients where they've applied for a $20,000 grant, they've had to stump up $10,000 themselves, and they've said, but Liz, I don't have $10,000, I can't apply. With grants, normally they take about 3 months to approve them, and then you've got about 12 months, depending on the grant, to actually do the project. So basically you've got at least 3 months, if not 6 months, to find that $10,000. So that business owner applied for the grant and then spent the next 3 months making sure that they drove their revenue so that they could fulfill that obligation of paying for the $10,000. So again, thinking about it, what's in your plan, knowing your numbers, how much money have you got in your bank account right now, but also just because it's in there, what other bills needs to come out. So having a look at your cash flow statement, what invoices have you still got to pay, what wages have you got to pay, all of those things. So again, this is when it's really, really important to understand your financials, your numbers for your growth, but also can you apply for those grants, and also can you afford to pay for that grant writer to help you write it as well. And making sure that you have your financial records up to date. Most grants over $50,000 in Australia, and I've even seen some smaller ones, require you to attach the last 3 years of financial statements, and sometimes even audited financial statements. So again, making sure that you have them up to date, you are looking at them, but you can also download them so that they can be easily attached to the grant application. Improving your financial capability. So this is really future looking when it comes to finances as well. So having a budget. I hope that you all, whether it's an organization, a business, or anything that you're operating, even a sole trader business, you need to have some form of budget. Even if that is a budget towards a revenue goal for each month, or knowing what your expenses are, or knowing what your expected overheads might be, or expected wages going on. I've got 10 staff, these are their salaries, that's my budget and my costs that I need to cover for my wages, so I can forecast that into the future and overlay that with my expected cash flow and expected revenue as well. And yes, things will change. I spent 18 months in London and budgeting teams, so we were doing budgets all day, every day, and they kept on changing, but at the best information at the time. So today, and then we made sure that we wrote down all the assumptions that we made, and then we review that in the future to see how it went, and then we would be comparing our actuals to budget, and then making changes and decisions as time went on, rather than just waiting till the end of the year. Understanding the importance of financial planning is so important, and again, making sure that you've got some finance tool, whether that be Xero or MYOB or a spreadsheet, to be able to make sure that your financial management is there and that someone else is reviewing it. So you might have a staff member who prepares it and you might be the reviewer, that's fine, but as long as someone's looking at it. With all of this stuff, there's absolutely no point in preparing it all if no one's going to look at it and analyze it and then make the necessary changes to be successful. At the end of the day, I'm here to set you up for success, and finance is one massive part of getting ready for grants, but also good business operation as well. Building a financial roadmap as well, in terms of what are your capital requirements, what's on your wish list. You know, there's some little things that you could just pay out of your working capital. the cash in the bank, and then what are some other things that you may need to wait for a grant and be searching for that as well. And talk to a good accountant. And I know you're probably thinking, well, what does a good accountant look like? It's one that's a bit proactive, future looking, but one that more importantly understands what you are doing in your business. And they understand your risk profile, because at the end of the day, most accountants are backwards looking. They're quite happy to say, hey, here's your report from the last financial year. And then you say, well, what about the future? And then, oh no, I just look backwards. So making sure your expectations are met and that you're having those open and transparent conversations with your accountant so that they are helping you with your business. And as a bonus to this masterclass, I've actually created a resource where I've come up with a few, about 10, vital questions to be able to go and talk to your accountant about, whether it be your entity structure, whether it be your financial management, and GST registration and things like that, so that you feel confident having those discussions, and so that you're not just met with, well, you're not going to meet the $75,000 threshold for GST, which we'll talk about in a moment, and that's the end of the conversation. This type of masterclass, when it comes to financial capability, was the very first masterclass that I did when I started my business. My pure frustration that there was too many businesses that didn't understand GST, didn't understand what sole trader or what entity structure they should have been, and they were just simply missing out on grant applications. And even during COVID, the amount of people that did not have the right setup, they missed out on millions and millions of dollars as well, because they weren't eligible on their current structure. But the other thing is, we need to be thinking about the current state of your business and our expected future state as well. And things evolve, things grow, things condense, whatever it might be. We don't want to be changing the likes of the entity structure every year, but we do want to be making sure that we're maximizing that structure for what we want to be doing. So that bonus sheet will be sent tomorrow with all the links, all the recordings, so that you are prepared for a confident conversation with your accountant to ensure that you are grant ready, you're financially capable, and that your business is being set up for success. GST registration, and you may be sitting there going, yep, we're registered, so it doesn't apply, so you can switch off for a little bit. But again, understanding the ATO thresholds, $75,000 of revenue for businesses and $150,000 of revenue for not-for-profits and other organisations in that space as well. There are always other factors to be taken into consideration. Now, I do just want to also share here if you left your corporate job and you are earning $75,000, please do not go into business thinking you only need to earn $75,000 worth of revenue to replace your salary. Yes, if you've got no cost, but that is just not realistic. So making sure that if that's your expectation to at least replace your salary, then you need to be registering for GST. The other thing that makes things much easier if we register for GST right at the beginning of our business is that we don't limit our growth. I've seen businesses turn down work because that piece of work would have tipped them over the threshold. They would have had to apply for GST and they didn't want to. So if you don't want to be registered for GST, you really need to think about why you're in business and what are you really doing. Because if you don't register for GST at the start and then you hit the threshold and you have to register for GST, GST at the moment is 10%. So that's a 10% increase. So you have to add that onto your prices. So you either absorb that as a business owner, so that's taking out of your profits, or you put your prices up by 10% or another figure. And a lot of people get very nervous about letting their customers know about a price increase. So that is one of the main reasons why we want to be registering for GST at the beginning, especially if we've got some big growth aspirations for our business, which we should all have. And having a finance system to be able to handle the GST and the BAS and being able to know how that works, being compliant there is really, really important. And I didn't even put it on the slide, but nowadays most grants cannot be applied for unless you're registered for GST. So that is a real game changer, and it is absolutely stopping people from applying for grants. I did have a client that I found them a grant. They ran an events business. They're not registered for GST. They could have applied for a $30,000 grant. They didn't want to register for GST, and then they didn't apply. So that's their choice. But for me, a little bit disappointing. But also, if you are running a business consistently with revenue less than $75,000, you also really need to be thinking about whether it's worth it, because that is about $1,500 of revenue a week. So if you're selling to 15 customers at $100 each consistently across a year, you will reach that $75,000 threshold. If anyone's got any questions on that, feel free to pop them into the chat. But I also realize that there will be a lot of people watching this masterclass who are already registered for GST, but if you've got any business friends that are not, then steer them here and really encourage them to talk to their accountant. But be mindful that the accountant will quite often just try and say to you, oh, well, you haven't hit the 75,000. This is where you need to go in with all these other considerations of why we should strongly consider applying for it. Now I'm just going to touch on 5 ways to be strategic about grants. Like, I'm strategic about everything I do. There has to be a reason. We can't just apply for a grant because we're eligible. We need to make sure that it's in alignment with our strategy. It's in alignment with where we want to go, and that the grant is actually for something that we had on our wish list anyway, that it's a bonus, not something we're relying on, and also not something so left field that it's going to cause problems for our business down the track. And I know of businesses where they have grabbed every single grant that they could because they were eligible, they made up a project, they got all the money, and what it actually did, it detracted them from their core business. So when those grants all ran out, or the funding ran out, it actually meant that they didn't have any clients that weren't coming through these grant programs. So again, we need to do it in a strategic way, making sure that we're not relying on grants heavily, just like we wouldn't try to rely on one customer or one supplier for any of our work that we conduct. So in Australia at the moment, there's a whole lot of grants out there that are related to innovation and technology. That's a really important government priority at the moment. Expansion and growth, efficiencies, rural and regional. There's a lot of, if you are based in rural and regional or operate there are a lot of grants targeting those areas. Sustainability and environment and community impact. And of course, there's many more, but these are the types of themes that are out there. So this is how we need to be strategically thinking about how can our projects align to these types of areas. There's also health and there's actually a lot of NDIS and disability services funding that are actually coming through grant programs now, which they ordinarily hadn't been. They've been allocated a different way. So again, now it's through the grants process. We define grants. That's probably what you're all thinking about as well. The Grants Hub, that is my favourite directory. That's got more than the 2,500 grants sitting on there across Australia. Business Australia for all the federal funding. Jump onto your local council website, same with your state business website, or if you really are struggling and want to outsource your grants club, your grant searching, you can join my Grants Club VIP membership and just send me an email and we can have a chat about whether that's suitable for your organisation. But think strategically. So have a look and see, Google search of what governments at those 3 levels, they're outsourcing. They're outsourcing to ensure that the objectives and outcomes are being met from their programs, but it doesn't necessarily mean that the government's going to deliver them in their entirety. So what programs and projects do you have on your growth plan? And this is so important, because quite often a grant will come out and we'll only have 4 to 6 weeks to provide the responses and submit it. So we can't be completely starting from scratch and planning a whole growth plan in that 4 to 6 weeks, as well as running our business, as well as running the grant application as well. So this is why I stress that you need to get grants ready before the fact, have all this information at hand, and then be able to tweak rather than starting from scratch. So I often have a lot of people who are running businesses that may not be eligible on their own for a grant, but then we start thinking about the collaboration, the partners they can work with, and the other programs that they can do in conjunction with another business, organization, not-for-profit, and then be able to apply through the grant then. But again, strategically thinking about how can your organization or business have the biggest impact on what you're trying to do, and also allowing the grant to be part of a fast tracking program as well, so that you can reach your targets quicker and faster. How to value add. So also thinking about who is in your business sphere, who's in your business circle. So having more knowledge about grants can help everybody, because people start talking about collaborations, they start talking about where'd you get the funding for that. And so I do encourage you to be in the know, to have these conversations with anyone, and get curious. If someone's built a big new shed or something, to say, was that a grant, or did I miss out on a grant? So you can keep an eye out for the next one, or just be aware that these things do exist. As I mentioned before, the bonus will be coming your way tomorrow. That's one of the draft versions, but I do want people to be able to have confident conversations with their accountants, and these are some of the vital questions that we need to be equipped with to go to our accountant to be set up properly. So that will be coming your way. I've also got some free resources on my website, www.grantsclub.com.au, and if you click on the downloads and the freebies, there's a whole lot of stuff there. There's also a quiz there around, are you grants ready? And what do you need to do? And also, if you do want to get in touch, I offer a 15-minute call with people that are wanting to know more specific information about how grants can help them and their organisation. And then also my services are listed on my website as well. I have 3-hour strategy sessions. I have 1-hour pick my brain sessions as well, which you can book on the website, or you can just send me an email and we can jump on the phone or Zoom and chat through with what might be best for you and your organisation. This is one of my favourite quotes when it comes to grants. Nothing is more expensive than a missed opportunity. So I'm all about making sure that people can apply for grants if they're eligible, making sure that our projects are eligible and that they're the best projects that we can put forward to be able to showcase our idea, to have that greater impact, and of course to get that big tick and the big approval so that those grant funds come into our bank account and we can do wonders with them. So that wraps up the formal part of the masterclass, and I do just want to say thank you so much for joining me today. These are my contact details, my website, my mobile, or send me an email. Happy to connect on LinkedIn, follow my socials as well, and as I say, happy to chat with anyone about grants. I will just stop the recording now and then we'll do some Q&A. So thank you everybody for joining live or watching the recording. Please do get in touch if you have any questions about anything I've talked about today or anything to do with grants, and we can get you on the road to being sorted. So thank you.